What's up, everyone? It's Scotty with Money Vesting. So, hope you all are doing great. I am absolutely exhausted right now. Like, literally, no kidding. Um, uh, but sorry for coming on late here. So let's take a look at the markets and let's see. Let's see what we got. We got SPY. This is the first time actually looking at the markets here in like almost 18, 24 hours. But SPY here pushing up 80 basis points. We got the QQQ up 60 basis points, and the Dow Jones, I'm assuming, also higher here, up over 82. So definitely pushing higher with the yields rotating back down. So wait a minute. Late, super early. JLS says, what? Wait a minute, it's 8 a.m. in New York? Oh my god. I thought it was 9. Hold on. 2:12 p.m. here. Okay, so yeah, oh man, what? I'm way early. Oh. I was literally rushing. Yeah, I just landed in Zurich, like an hour ago. Got done with everything, just came to the hotel room and just wanted to go live. Thought I was actually late. Yeah, no, but that's fine. That's fine. We'll continue with our live stream. I'm just completely 5 a.m. in California. Okay, that makes sense. Yeah, I've been kind of like all over the place the last 15 days. Just been kind of working through a lot of time zones, but anyway, we'll roll with it. So, fears of severe recession deepen as European business activity slows on surging energy costs. So, obviously, European Union or ECB, sort of like the European Central Bank, has been raising rates. Brendan says, bro, an hour and a half early, and he says, sorry, I'm late. Man, I lost track of time. Like, I really did. I thought the markets here in Switzerland open at 2:30 p.m., but apparently it's 3:30 p.m. That's even more late. Like, that's crazy. Yeah, I don't know. Like, I guess I miscalculated the times. I just landed in Zurich about an hour ago. So yeah, I was just trying to make sure that, okay, I get to the hotel room in time to go live, but apparently I miscalculated the times there. But anyway, so ECB obviously has been raising rates along with the Federal Reserve. So by the way, make sure that you guys can hear me and see me. Just want to make sure the audio and the video is working well. Milan says, Caddy, you're wearing that red shirt just to screw with us. I was just wearing this on during my travel. Like, I just didn't literally have the time to change. Like, as soon as I entered the hotel room, I turned on my computer, connected to the Wi-Fi, and then just went straight live. Like, I really didn't have the time to like sit down or anything. My bags are still packed, literally. I haven't even opened it yet. But anyway, so we did get the what is it called? The Eurozone's Purchasing Managers Index, and that did fell to 47.1 in October. That's down from 48.1. A reading below 50 represents contraction activity, and these numbers post some downside risk to a lot of people's forecasts, notably to ECB's. So we'll see. I think they are going to be raising rates again right after the Federal Reserve does in November. I think November 4th is when the ECB meeting is, and then November 2nd is when the Fed meeting is. So, obviously that's going to be very, very important for global markets, for central banks to continue to tighten. And JP Morgan president says a recession may be price to pay to beat inflation and market bottom not in yet. So, what's his name? Let's see. Daniel Pinto, JP Morgan's president, says, and I quote, I think putting inflation back in the box is very important. If it causes a slightly deeper recession for a period of time, that is the price we have to pay. And I don't think we've seen the bottom of the market yet. So another person calling for some more downside here for the markets. And obviously he leads the investment bank, the largest investment bank by revenue. And of course, Jamie Dimon has also addressed his concerns for a recession, of course, slowing down in economic activity. We'll talk a little bit about Chinese stocks here in just a minute. I know a lot of people are talking about NIO and Alibaba. So yes, Alibaba Tencent shares plummet 11% alongside China tech stocks as Xi Jinping wins for the third time as a leader of the CCP. So shares of Chinese tech giants Alibaba Tencent closed down more than 11%. Search company Baidu was down 12%. And some of the other Chinese stocks also coming down. The move comes after Chinese President Xi Jinping paved the way for an unprecedented third term as a leader and packed the Politburo Standing Committee with the loyalists. And investors fear a continuing strict policy that could hamper growth of tech giants, and very few who can challenge Xi's policies, even those that are negative for growth. So that's obviously one of the reasons why we are selling off quite a bit here. So let's take a look. Alibaba here is down, wow, 11%, $64. Insane amount of momentum here for some of these companies. Neo is down to, down 8% here, coming down to $10.28. Xpeng here down a little bit over 10%. Let's take a look at Baidu, down over almost 12%, coming out to $80. And then let's take a look at Tencent as well. Let's see, I think it's a number here. We'll just go to our Chinese watch list. So a lot of them actually closed down, right? Some of the ones that are actually trading in the Chinese Hong Kong market. So this is going to be your Baidu down over 12.5%. This is Tencent down over 11%. Alibaba, Neo, all of them closed down anywhere between 9, 10, 11%. So definitely a pretty significant sell-off here for a lot of these names. And Tencent pre-market's also down 11%. So here we go. I mean, obviously there's a lot of geopolitical tension, a lot of regulatory pressure, and that's been the story for most Chinese stocks for the better half of the last 2.5 years, and nothing's really changed. And technically speaking, I mean, they've just been on a consistent downtrend. As great of businesses these companies are in an economy that is consistently growing, obviously they're going through a lot of other macro factors, headwinds, regulatory issues that are just not allowing these companies to trade at their intrinsic values, at their fair values, where they should be trading at. So they are certainly, as a bunch, as a collective group of stocks, I definitely think that, in my opinion, they're undervalued. But will that value ever be realized, or their potential will ever be realized in the market? That is a big unknown. That's a big question mark because of all the regulatory issues and geopolitical tensions that are surrounding these companies. So it's a very, very difficult environment, especially for Chinese stocks. It's very, a challenging environment to be investing in these, because fundamentally speaking, technically speaking, yes, we've got oversold and we've got undervalued, but when you take into account the macro headwinds, it's just, whether they realize that potential or not is a big question mark. So reading further here, let's take a look. I've got some more things to share here. So let's see. Obviously, Chinese stocks are moving higher and lower quite a bit. Tesla also down 2.5% pre-market after cutting Model 3 and Model Y prices in China by up to 9%. And the price cuts come amid signs of softening demand in China. And Chinese EV makers are also seeing their shares under pressure, with the Neo, Xpeng, Li Auto, all of them down because of some of the other companies as well. What was your fair value on Neo, and is it worth a punt at these prices? So Michael, I've mentioned this in my previous videos as well, that I don't have a fair value or intrinsic value on Neo yet because they're not profitable, right? So the moment they become profitable, the moment they are able to turn the corner towards profitability, I will have a much better visibility into the future, and then I can actually calculate the intrinsic value. That's the same reason I don't have a fair value in Square. I don't have a fair value in Shopify, because again, these companies are not profitable. I can take a look at the price of sales and kind of apply a discounted sales model, basically projecting what the sales might look like in the future, and then putting a multiple to it, and then discounting all that back. But that doesn't take into account the shares outstanding, share dilution and buybacks, and it's also a very, very basic elementary level of valuing, companies. It doesn't give us like a stock price that we can kind of put a target on for individual companies. So I can do that, but again, it's going to have that higher error, higher margin of error with that analysis. So I do prefer discounted cash flows or discounted earnings back to present value, which neither right now Neo has, unfortunately. So ServiceNow added 2.5% pre-market after Guggenheim upgraded the stock to buy from neutral. And then that's pretty much going to wrap up the pre-market update here. Lots of moves being made. The most important thing really to watch for is the 10-year yield, right now sitting under 1.2%. And the market's obviously pushing higher somewhat. SPY and Dow Jones much higher than compared to, of course, the NASDAQ. But this is a big earnings week as well. So, we've got lots of companies reporting earnings. Let's take a quick look at our calendar here. So this right here is the calendar, right? So we got nothing today, nothing that's super important. Of course, we've got UPS, General Motors, Coca-Cola, 3M reporting tomorrow after, before the market opens, and then after the market's closed, we got Microsoft, Alphabet, Enphase, of course, a lot of these companies that are super important for the market, some of the big giants, big tech companies reporting. And then, of course, we got Meta, we got Apple, Amazon later in the week, and along with Intel, Shopify, Pinterest, Southwest, just the list goes on and on. And then, of course, next week, we've got companies like AMD and PayPal and all these companies also reporting. So So Ray, are you still firm fair value for Tesla? Yes. So I've actually done a video on a Tesla recently. We talked about it, and we went over the fair value, the intrinsic value. So right now, based on the assumptions that I have, it's going to be sitting roughly in the 170s, which has been upped from like 150s. And really, I mean, if it comes down to 170s, if you think about Tesla's earnings this year, net income wise, they're going to do $12 billion, right? That's 100% growth on a year-over-year basis, actually more than 100%. And even if they grow that $12 billion by 30% over the next 5 years, which I think is easily doable for Tesla. 30% is actually not even that much. And then when I apply a 25 times P multiple, discount everything back by 12%, I get a fair value of about $170. Now, of course, there's some sensitivity there in terms of share buybacks and dilution. The company said that they are going to be buying back shares in the tune of $5 to $10 billion starting next year. If they keep doing that every year, that's good. That's good for us, right? That's good for shareholders because there's less shares outstanding. That means we have a bigger ownership in the profitability. So I'm actually accounting for, I believe, 0.5% of share buybacks every single year. But of course, if they keep diluting shareholders in the future, then that fair value obviously would go down, and we'll have to account for that margin of error or margin of risk. So right now, obviously, I do think that they can grow 30%, and they do deserve like a 25 times P multiple. And really comes down to like basic math here. So if you think like, let's say $12 billion times 1.3, 1, 2, 3, 4, 5, that's going to be about $45 billion in profits over the next 5 years, right? And in year 5, they're going to be doing just under $45 billion. You divide that by 0.2, and we're looking at top line revenue of about $222 billion, which is doable for Tesla. Like over the next 5 years, divided by, let's see, 56,000. So yeah, we're looking at roughly an average selling price of about $40,000. Might be a little bit on the low side. Definitely could be higher because I'm taking into account a 20% net income margin for the company, just on a more surface level, just rough estimates here. So 25 PE for Tesla is, I think, really, really reasonable. I think it's reasonable if they're growing by 30%. Obviously, some people might want to pay 20, some people might want to pay 40. Depends really on who you're talking to, because Tesla's valuation is a very touchy, sensitive discussion. And obviously there's going to be a lot of back and forth. Anyway, so let's take a look at Apple here. Apple also reporting earnings later this week. So really what I'm interested in, by the way, I actually did analysis, but I don't know if you guys did check it out, but let's see, EPS. This was the entire analysis, right? So this was for the 5 big tech companies that are reporting their numbers. So we got Microsoft, Google, Meta, Apple, Amazon. Combined market value for all 5 is, over $5 trillion. So definitely very, very important for the markets and what they end up reporting. Right now, we only have Microsoft as a company. Microsoft and Apple are the 2 companies that are expected to report growth on both revenue and earnings, right? So they're expected to grow revenues by 9.8% for Microsoft. For Apple, 6.5%, a little bit over 6.5%, and earnings in the low single digits. Microsoft is expected to grow almost 2%, and Apple at a little bit over 2.5%. So that's good. Those are the 2 biggest companies in the U.S. So Microsoft is over 2 trillion, Apple's over 2.5 trillion. So that's good. That's what we want to see. At least those 2 companies are growing. That will be at least some strength for the market. And of course, Meta is the only company that is expected to decline on both revenue and earnings because of the lower spend and a lot of other pressures that they're facing, and their shift away from digital advertising. Not really shift away, but off their spend on Reality Labs business as well. Amazon's earnings expected to decline by 29%, and Google's expected to decline by 10%, but still Google is expected to grow by 8.6%. All companies are still going to be facing somewhat of a foreign exchange headwind, so that's definitely going to be impacting a little bit of the revenue number here. So Cap says, why online early, something brewing? Yeah, early because I completely miscalculated the time. I'm in a different time zone now, so I just didn't realize that the markets here open at 3:30 p.m. and not 2:30 p.m. So I thought I was late when I came at 2:10. I was like, oh, it's 9:10 a.m. I gotta go live. And then as soon as I came in, I looked at the time. I was like, what? I'm super early, 1 hour early, but that's fine. I'm just doing a longer live stream, and I'll be taking some questions here for individual companies and individual stocks here as well. So Alex says getting old, Caddy. Not really getting old, but it's just that I've traveled like the last 15 days. I've been in 4 different time zones. So like from India to Switzerland to New York and Denver. Like I've been trying to keep up with all the different time zones, but it's difficult. It's hard, and I'm starting to lose track of days, starting to lose track of time. Like it's been difficult. Never doing so much traveling in such a short span of time ever again. Like I don't recommend it. Don't do it. So, but you're right. Getting old, definitely getting old. I think that has something to do with it. Do with it as well. Yeah, I used to travel. Jet lag is no fun either. You're right. Jet lag is not fun. So Shopify fair value again, they are going to be reporting their earnings, I believe, next week. So we are going to be taking a look at their revenues. We'll talk a little bit about what the earnings might look like, and then we'll try to calculate what the fair value might be, because Shopify really has come down, quite a bit from its all-time highs. Obviously, it was trading at well over 176. It's now coming down to like sub $30. So this right here is still going to be somewhat of a resistance that we were watching at close to $30. Brendan is asking me, how old are you? How old do you think you guys? How old do I how old do I look? Let me ask you that. Let's take a look. Fiverr here. So Fiverr obviously in a very, very similar situation as 38. Timothy, what? Wow, man. 30, 29, 26. Jesus, these are brutal. That's 28. 29, Danny says. 25. No, I'm 25 right now. I'm 25. And yes, my birthday coming up in November. But anyway, Fiverr. Excuse me. So Fiverr is also kind of like very similar to Upwork, right? So UPWK. This has also been like selling off quite a bit. Both these companies have just been, down 70 or 80%. Again, valuations got too inflated at the time when they were trading at $64 or $65. Like if you do the math at where they were trading at, $502 million in revenue, the market cap right now is 1.6 billion, right? So you take a look at where it was prior to this sell-off, right? It was already up like 400% more. So we're looking at, we're looking at almost $64 billion market cap. 64 billion divided by 502 million, that's over 30 times sales. So a lot of these companies were trading at, very, very significant price to sales multiple. Wow, Minal says 48. Jesus. That's like, wow. Well, maybe because I've just come back from a long travel, I'm just like, I need to take a shower and shave and stuff. Like, trust me. 48, that's crazy. But anyway, so like I was saying, a lot of these companies obviously got way too inflated in terms of valuations, and it never made sense for them to trade at 20, 30 times sales. And obviously, they've just come down to more of a fair value, not even fair value, but more to like retreating down to their means and where they should be trading at. So in case of Fiverr, $1 billion valuation, revenue last year was 300 million. That's 3 times sales, which I think is reasonable, right? 3 times sales. Now the only thing really is profitability, right? Can they actually achieve consistent, sustainable profitability to a point where they're actually generating earnings and profits? So for these companies, really it depends. Your qualitative analysis is going to be the big aspect. So Oleg was asking me whether Fiverr is a buy. I would recommend, Oleg, that you spend a lot of time in qualitative analysis, right? Because the quantitative is still yet to be seen. Like we still need to wait and see whether the companies actually become profitable. Can they execute on their plans or not to generate positive cash flows and earnings? But right now, the investment thesis really is going to be on qualitative analysis, right? How's the management? How's the brand? How's the reviews from the customers? How big is their market? Things like that, right? So those are the questions that you need to answer. And we're working on something like next year, like 2023. I have some really, really interesting plans for all of you guys, and that's something that we are working with a few developers to get that done. So yeah, super excited about that. When it comes to fundamental technical analysis, I'll have you covered for everything. I just need some time, and super excited for that. So we'll definitely have that up and running in 2023. All right, let's see. Roblox. Let's take a look. Let's see how Roblox is doing. All right, so Shang says you know a lot for 25 year olds. Thank you, appreciate that, you guys. Your wisdom is beyond your ears. That's why they're guessing so high. Thank you, I really appreciate it. So Roblox on the short side. Let's take a look. So down a little bit over, let's see, 70%. Wow, it was actually down a lot more. 83% from its all-time highs. $25 billion market cap, and right now $2 billion in revenue. So we're looking at about 12.5 times sales, which is still, you know, a little bit on the high end, because so every company, regardless of which company it is that you're looking at, it doesn't even matter whether it's a public company or a private company. Every single company that generates revenue, has at least $1 in sales, will have one simple metric: price to sales, right? That's the most basic, most go-to metric that you can look at if the company doesn't have earnings or cash flows, right? If any company you're looking at doesn't have profitability or cash flows, you can at least look at the price to sales and get a good sort of understanding on whether it's appropriate or not. In Roblox's case, 12.5 times sales, it's high. It's high in my personal opinion. Microsoft trades at 12 times sales, and that is a company that can actually demand such high multiples because of how strong the brand is, how strong the company really is. It's a monster. But for Roblox to demand 12.5 times sales, I don't think that's appropriate. So from a fundamental standpoint, sure, there might be a little bit more downside here for the company, but let's see. So from a technical standpoint, it kind of seems like this could be seen as a little bit of a bull flag as well, as you know, this right here is the pole, and right now just trading sideways. And then if you do get a breakout above this level right here, which is going to be sitting at roughly $53, $54, so that's going to be that resistance, then there's a possibility for us to see some more upside. Another really interesting chart that I could see right now is a potential inverse head and shoulders. So a neckline, exactly, this is going to be that resistance. That's a neckline. We got the left shoulder here. If I go over to the daily chart, we might be able to see it much better. Yeah, so we got the left shoulder, the head, and then a potential right shoulder forming. And again, if you do see that potential breakout above $53, $54, then there's a possibility we see more upside and some more potential moving up. So technically speaking, there are some couple bullish patterns forming for Roblox, but fundamentally here, 12.5 times sales, still too high for me. And of course, the company doesn't have earnings yet. So that's what we're going to wait for. Jason says, Caddy says he's 25 for credibility. He's 19. Man, I wish I was 19 though. I really do. That's what happens, right? The older you get, the more you wish you were younger. It's just, it's crazy. But yeah, that's funny. Let's take a look at Roku. So let's see. I think Roku, I think Kathy did an analysis on Roku. I forgot what the price target was. I think it was more like 600-700%. I think Zoom was over 1,400%. But then let's see. Yeah, so it was 700%. Yeah, so Zoom was 1,500%, and Roku was 700% by 2026. Yeah, so I actually I think did some analysis on that in the past, but yeah, these were some of the numbers that they were forecasting. But obviously that's you know, that's an insane price. I mean, for Roku to rally up to 700%, you know, it would be trading at roughly almost $400, which is obviously crazy. But you know, Kathy would also mention that a lot of her stocks will be not only will they be trading at their all-time highs, but they will be surpassing their all-time highs in the future. Like in the case of Zoom, for it to surpass its all-time high and go beyond $600, it needs to go up 700%. For Roku, it would need to go up a little bit over almost 1,000% for it to go up to like 560%, like that, to go over $560. But nonetheless, again, the same sort of analysis and, you know, thesis applies here too. Like Roku's $6.9 billion revenue market cap, revenue $2.7 billion. So you do the math, 7 divided by 2.7, 2.5 times sales, which is actually not bad at all. Trading at very, very reasonable numbers. And you know, 7,000 divided by 242, 28, 29 times earnings. That's actually not bad either. If they're growing earnings anything close to 29% or higher, they've got a PEG ratio of 1. So Roku is actually shaping up to be, the last few quarters not so much because advertising spends down, so that makes a lot of sense. Meta, Google, Snapchat, Pinterest, all these companies are going to be hurting a little bit because of 2022 and how ad budgets and marketing budgets are getting cut. But from a valuation standpoint, definitely is now starting to make sense. The only question really is, can they continue to grow revenue and of course be profitable at that scale, considering all the macro headwinds in 2022 regarding advertising. So the current valuation makes sense at 2.5 times sales and just under 29 times earnings, but they do have a lot of headwinds to deal with, and can they weather through in 2022. And of course, if you take a look at the balance sheet here, hopefully they got a negative net debt. So okay, they got so negative net debt of 1.3 billion. That just means they've got more cash than debt on the balance sheet. That's exactly what we want. And then let's take a look at the current ratio here really quickly. So we're trading at, so plenty of liquidity, no solvency risk for Roku at the moment. And the revenue's been growing, earnings just turned profitable, but it's just a matter of, whether they can survive in the next few months here. All right, let's see. Did you see India versus Pakistan match yesterday? I actually caught actually didn't even catch the match. I watched the highlights for the last like 2 overs. And it was intense. It was interesting. I'm not usually like a huge cricket fan. Like I don't necessarily watch it a lot, but it was intense. It got really, really interesting towards the end. All right. Yeah, the microphone. I know you guys missed the microphone. I haven't really picked up anything yet. But I feel like this sounds just as fine. I was kind of listening in on my other live streams just to make sure the audio is good. And I think it works fine. I think it's the only thing is that the red mic helped when there was more background noise. So it was more like concentrated and I was able to focus on that. But if it's quiet, if it's a quiet room, I think the microphone here just works just as fine. All right, CNXC. Let's take a look. First thing I'll look at when whatever company I'm analyzing is the market cap, right? The market cap right now is $6 billion. That's where it's at for this company, and the revenue, 5.5 billion. So that's really good. Almost 1 time sales, a little bit over 1 time sales, and then earnings 400 million. So if you do 6,000 divided by 400, 15 times earnings. That's also really good. We've got a consistent revenue growth and earnings growth as well. Quarterly revenues and profits have been very stable. That's a very good sign. So let's take a look at the balance sheet here. Okay, so they are sitting on $2.7 billion of net debt. So they've got more cash. They've got more debt on the balance sheet than cash on the balance sheet. So that is a little bit of an issue long term. Not really, like it's not like a huge deal, but there are some things that we look for when we're doing analysis. This is, by the way, a spreadsheet that I shared with all of our members that you can download. You can pretty much plug in all these numbers over here, and it'll tell you all the 8 metrics that we focus on when it comes to the balance sheet, right? If you know this, if you literally just analyze these things, you will pretty much have a complete overview of the company's balance sheet, right? Balance sheet and just the solvency risk, right? How big of a solvency risk that company has. So that's available for you to download, and of course use that for yourself if you want. All you have to do is just plug in some of the inputs here. So everything in blue you see over here are going to be the inputs. You simply find them from the balance sheet of the company. And then once you do, all these other things will automatically be calculated. And of course, will give you an idea of if it's green, that means it's good. This is where we want it to be, like more than 1, less than 3, more than 1, less than 3, more than 1, and then just a little bit over 20%. But for this, cash to debt ratio, definitely less than 1. They've got more debt than cash. And then let's take a look at the liquidity here. Current ratio is 1.67. Quick ratio is 1.67 as well, which is good. Short-term liquidity is good. But let's take a look at earnings here. So they are expected to go up a little bit, then decline, and then start kind of slowly accelerating again. So I would say the valuation is low for this company. Technicals are obviously very weak, but again, for pretty much every stock that we look at in 2022, the technicals are horrible. And I would just pay attention to like support around here, 110 area. you know, around here, 110. We kind of bounce off of that level. This has also been a previous resistance and a little bit of a support here to watch. So that would be a good sort of technical setup for some potential upside. And the valuation is also decently low here for this company. Meta down 1.5% pre-market. Yep. So, Caddy, since you started 1 hour early, will you stay for 2 hours today, getting off at 9:30 a.m.? No, I'll probably stay for 2 hours. I'll stay till like 10 in the morning, like 10 a.m., 10:15 a.m. Furnace says, really misread Mike in your live stream. Yes, I know. I miss it too, but what can you do? You guys cursed the mic a lot that it pretty much died on me. Yes, so SMH, Ashraf, that's a great point. SMH, I'm still planning to buy this. We'll probably pick it up today or sometime this week. Planning to buy it. And then AMD is actually not a big component of this ETF. So, you know, again, if you go back and watch that video, we talked about the top 10 holdings, right? Top 10 are pretty much Broadcom, Intel, Qualcomm, NVIDIA. NVIDIA is the biggest one in here. And then some of the other companies as well, right? TSMC, Texas Instruments, I think On Semiconductor is also part of it. So AMD is not a big component of that. So I'm happy to actually be invested in AMD and also get exposure to SMH because, as I said, semiconductors, you better find opportunities in this sector, period. Like there's definitely a lot of opportunity here. And the reason why the market's been the reason why this sector, this industry has been selling off so much is because it has to do a lot with the macro factors, right? Sure, consumer demand has slowed down for the PC market, and we are seeing some leveling off in demand, but it's not like we're not going to grow, right? It's still expected to grow, right? By 2030, as I showed you guys, market size is expected to grow to over I think it was like $772 billion. And there is going to be need for a lot of chips. There is, like, as we get more technologically advanced, as there's more and more tailwinds for the entire world when it comes to, you know, Internet of Things, artificial intelligence, machine learning, electric vehicles, the metaverse, like you name it. All these things will require tons and tons and tons of chips. So, and the fact that this thing is now trading at under 18 times earnings is pretty crazy, right? And a lot of companies in this ETF are trading at under 15 times earnings. NVIDIA is still the only one that's like at 28. That's why, like, I'm not super keen on adding NVIDIA even at 120s or low 110s. But I really would be interested in low 100s for NVIDIA. So SOXX, Kevin, let's see. It's the iShares. I think it would depend just on the expense ratio, the weighting. I would say that if it's very similar, then there's really no reason for me to pick one versus the other. If there's just any difference, like for example, if SOXX is actually more expensive, in other words, the expense ratio is much higher, and depending on the weightings as well, how it's weighted, obviously they're going to be differently created. But if they're very close to, like if they're very similar, then there's no reason for me to pick one versus the other. But so this could also be an option for some people. Obviously, you might have to take a look at what the expense ratio is, what the weightings are. But really, in anything in semiconductors, I do think is just selling off based on the macros, and it's just setting up for some significant opportunity here long term. All right, let's see. Tesla here. Lots of topic about Tesla. Marcus says Tesla is in such a bubble here. Let's see. Lauren says Tesla is now starting to sell data centers. Interesting. Yeah, they got a lot of levers to pull. So which earnings are you looking forward to this week, Caddy, apart from Tesla? So Tesla, yes, already reported already. But of course, big tech is going to be important for me and for the market. So Microsoft, Alphabet, Meta, Apple, and Amazon. Then other than that, I'll be looking at Enphase, Visa. I'm interested in Chipotle. I've done an analysis on Chipotle. We've got a fair value in Chipotle as well, but it needs to come down like, 40, 50%. May not be that much anymore because it's already been selling off. I've done analysis on Spotify as well, but not super interested in investing in that one. And then we'll also be interested in Boeing, And then Shopify, definitely, to see what their plans are and when they can actually achieve profitability, because Shopify is another really interesting company in the e-commerce space. But because e-commerce and advertising and all those sectors are kind of hurting right now, Shopify is in the very similar boat as Amazon and some of the other companies here. And then we'll also be interested in Intel, absolutely, what their plans are with manufacturing business, and the fab and the freaking transition that they're making right now is obviously hurting their business. They've just been down 60% since like their recent highs. So would be interested to find out. And then Pinterest, and then finally ExxonMobil and Chevron. So, it really comes down to like, it's so crazy that these two companies right here, Exxon and Chevron, have so far tilted our earnings growth in one direction that it's, without them, earnings are nothing. Literally, they're declining year over year. If it weren't for ExxonMobil, Chevron, and some of the other big energy companies, it's crazy how all the other earnings combined are down on a year over year basis. But of course, if you include for that, we're still expected to grow. So I think this quarter as well, they're expected to report over 100% in earnings growth. So, more than double on a year-over-year basis. So that's going to be good. That's going to, at least on the surface, show that there's no earnings recession yet. But in reality, I think there already is, given that we've already seen 2 consecutive quarters of declines if you take energy out. So X energy, there is an earnings recession. So any news on NEO, why it's so much down? We talked about this earlier. We talked about how there was, let's see if he has it still. So there, Xi Jinping obviously won his 3rd term as a leader of the CCP. So the market's only starting to kind of price in that this is going to lead to more regulatory pressure, more scrutiny, more geopolitical tensions, and as a result, all Chinese stocks are down. It's not just NEO, but a lot of them are down quite a bit. Last week was also interesting, right? Mary Daly's comments, in my market update video, I wanted to specifically mention to not obviously get too carried away with those comments, because Jerome Powell's already mentioned that, they're going to still tighten and until inflation comes down. And inflation is nowhere near the target at the moment. Sure, it can come down in 2023, and that's what the expectation and the hope really is, but it's not yet there. So those comments really don't hold a lot of value, because anybody can say anything. Jerome Powell was talking about transitory for a year and a half until they finally quit saying that, and then they completely pivoted to raising rates too much too fast. So it's all data dependent. It's all going to be changing every second, every minute. So the market's expectation of, once again, trying to anticipate or predict a pivot, in my opinion, can be, once again, irresponsible, because once we get that disappointment again, we just keep kind of going through this process over and over and over again. It's just markets get too excited of a pivot because somebody says something, or the market starts anticipating, oh, pivot's going to happen, and then it doesn't, and then we just like come crashing down. So there was negative China GDP data too. Yep. So we talked about that as well. Good point. We talked about the, what is it called? The Purchasing Manager Index as well. I think that came out. All right, let's see. We still have about 40 minutes till market opens. If you have any questions, let me know. So this week we go 10% up. Then Fed will say 0.75 and next 0.75. China's on the floor and won't come up soon. Japan is in big trouble. EU is so inflated, and we will get slash crash on the market soon, is what Matteo says. It really, so now it becomes a game of what's been priced in and what's not. Really, that's what the game is. EU. Well, I'm gonna go out and I'm gonna see what it's like in reality. But the reports that we're getting, the inflation data that we're getting, of course, the mess over in the UK and then in Europe as well, are telling us that definitely there's a lot of issues, and China, of course, is also dealing with their own issues, and the US, I think we're all just waiting for whether something will break or not. The UK has already seen that. China's seen that to some extent. But really, it comes down to, in the US, whether we see something that breaks and we see improper functioning in that sector, in that industry, in that area, and that's what's going to lead to the market probably pivoting a little bit. What's my time zone? I believe I'm in the European Central Time. Like, I gotta see here. I'm in Central European Time. Yeah, that's the one. Central European. So Tesla, Arnold, we had a big discussion about Tesla earlier. We talked a lot about the fair value. We talked a lot about the business and the margins and all of that. So you can kind of go back and check that out, and then of course, jump over to the live stream here. So where do you see the biggest surprises in the coming earnings? I feel like the expectations are really, really low. Like the bar's been set so low for a lot of these companies that, we might not see like big surprises, but we might see earnings that might come in a little bit better than what the expectations are. Netflix, to some extent, already did surprise because 2.3 million subscription additions is actually a lot on a net basis. After the fact that they lost, close to 1 million subscribers last quarter. So that's a big number. That's a big jump, right? 2.3 million. If Meta can actually add daily active users and monthly active users in that sort of fashion, that would be a big surprise. But like I said in my other video, it's so saturated that 3 billion people out of 8 billion don't even have access to the internet. They're not connected to the online world. So that's a big potential opportunity, but it's not there yet. Not functioning yet. So Viking says, no, I read the report on Netflix. It was bad. What was bad, Viking? What did you think was bad on that report? I don't think it was great. I don't think it was anything to write home about, but there were some things that I did really like about Netflix. One thing that I would mention is that if there were no foreign exchange adjustments, that company grew. That company grew revenues, and that company grew ARPUs as well. Because of the foreign exchange headwinds, we're obviously seeing lower revenue in everywhere but the US. EU, Asia Pacific. Exchange rate is just one. So obviously the foreign exchange was a big issue there, and it will be for many companies. You'll see that for Meta. You'll see that for a lot of other companies. Operating cost. So what about operating costs? Operating margins were 18-19%. That was really good. I think it was the guidance that you're talking about, and that might have been because of the one-time write-off and one-time expense that they have. So operating expense is going to be much higher in the fourth quarter. So operating income is going to be much lower, and EPS is also going to be much lower in Q4. But that, again, on a non-GAAP basis, doesn't really matter. Let's see. Have you gone over oil? Let's see. Oil here is down 2.3%. So a little bit over $83 a barrel right now. So this is still going to be that resistance to pay attention to at 86 for the month of October. Let's see where we are. We are only up 4.3%. So, at one point, crude oil was obviously up over, I think, 9 or 10% for the month of October. It was up over 17 to 18%. Quite a bit, right? So we have pretty much made a lot of progress since, and crude oil has come back down to $83. We really want to see it below 79.67. We want to see it pretty much below $80. If crude oil closes below $80, that would be very, very good for inflation next month, the print that we get for October. But if it doesn't, then unfortunately we might be looking at not only the pressures from shelter and food, but hey, crude oil is also back in business. After 4 months of consistent declines, it might push up higher again. So, that's what I showed you guys in my previous... Wait a minute, am I... Okay, I just want to make sure that I'm actually sharing my screen here. Because when I go on YouTube, why was it actually... Why was my... I'm showing my screen, right? You guys can see my screen? Just want to make sure I wasn't just talking to the camera for the entire... an hour. Okay, perfect. So, all right, if you take a look at the charts here, this is the CPI, right? If you take a look at specific items, and if you take a look at energy, right here, you'll notice the last few months it's been coming down, right? So since June, July, August, September, like the last 4 months, that's a really good decline. That's what we want to see, right? Because why? You take a look at the monthly chart for crude oil, 4 consistent red candles, so it's down. If in October it actually ends up higher, well, we could see an uptick in crude oil again, and this is on the back of shelter prices going higher. Look at that trend for shelter, just consistent uptrend here. And then of course food prices also very much on this consistent uptrend. So it's not going to be helping our inflation situation. Yeah, not sharing screen for 20 minutes for a video again. I know, that was so frustrating. That was like, oh, wasted so much time there. So, Caddy, real question: oil with the U.S. releasing the reserves, the U.S. will top it up after the midterm. Do you think the oil will increase a lot, all things considered? I think it might. Like in the winter time, it might. It is possible that because the SPR is depleting really, really quickly, right? I mean, we are seeing the strategic petroleum reserves come down, and if the West and the OPEC continue to have their tensions when it comes to production, then it's going to be a problem for oil prices. And I think that's really what Warren Buffett also sees, because he's been plowing money into Occidental every chance he gets. Literally just millions of shares being bought every single week. But I have looked at their valuation. I've looked at their earnings and whatnot. In my opinion, it's just a little too rich for $70 per share. Because earnings expectation are really, well, I guess it depends really on where oil goes. I mean, if you take a look at earnings here, the next 4 years, they're expected to come down like insane. Like look at where it's like from $10 a share to down to like $3. It's the same thing with ExxonMobil, Chevron, like all these companies that are growing so much in 2022. Like look at their annual forecast for earnings. They're expected to come down and decline, right? So I think all right, let's see. So what website is that? IG, that's the bls.gov website. So that's the government website you can go to. Like simply just go to bls.gov and then you can come over to subjects, and then you got all the information related to unemployment, inflation and prices, like the CPI, the PPI, all that stuff that you can look at. So then CPI and then charts, and then you can click on over here the actual past 20 years trends, and then there you go. There's your chart. Yeah, Chinese stocks are getting hit pretty hard here today. Volatility is up to 30, just a little bit over 1.2%. And then Bitcoin, Ethereum just been consolidating sideways. So let's take a look at our poll. By the way, make sure that you guys drop a like if you haven't already. 94 likes right now. So 94 likes. Let's see if we can at least get up to over 200, because we have 350 people watching. So I'd really appreciate that. And let's see what we got for the polls. 58% expecting the markets to be green today, 30% red, and then 12% flat right now. So that makes a lot of sense considering that, where we are. So I'm going to end the poll there. I think that's a pretty good data set, 435 votes. It's a lot. And yeah, markets are green right now. We'll see what happens rest of the day, because we've got some big earnings coming up. When the Fed increases rates by 0.75% in November, how will that affect the 10-year and the 3 years US bond and Tesla in price? Ooh, Ron, that's a very specific question. So the short answer is it's not going to be great. It's not going to affect in a positive way for Tesla or any other stock for that matter, because really what the Fed is doing is they're just, again, tightening the economy, right? They're tightening liquidity. They're just creating an environment where it becomes more difficult, very difficult, to borrow money for starting a business, for growing a business, for hiring people, for all the things that people borrow money for, right? It's going to becoming expensive. That's never good, obviously, from a growth perspective, but they need to do that. And obviously inflation is not coming down anytime soon, at least not in 2022. So short answer is Tesla or any other stock for that matter, any other growth stock for that matter, is not going to be delighted with that 75 basis point hike. But really, again, going back to our previous discussion, now the question is, for the market, what's been priced in and what hasn't yet been priced in? In my view, I think 75 is already priced into the market, so we may not get like a big surprise in November. But what their guidance is, or what the tone of the meeting ends up being for December, is what's going to move the market. So if they say that, look, inflation is still sticky, it's still high, another unusually large rate increase might be appropriate in December, well, there you go. That's not going to be good. But if they say that, look, we've already raised rates so much, it would be appropriate for us to pause our policy and start evaluating, the cumulative measures that we've taken and how that's going to affect the markets and the economy and the financial conditions and stuff like that, then that's a little bit of a hint of a pivot, right? They don't want to over tighten. So it really depends on the tone. And I'll be live streaming it from here. What the Federal Reserve ends up saying, what Jerome Powell is going to talk about, and it should be an interesting day. It should be an exciting day. And it's the second to last meeting before the year ends. We've got another one in December, and it'll be it. I think 75 is locked in for December. I do think 50 is pretty much the way to go, but you never know with the Fed. So Deepak says, Scotty, tech will have good earnings, so it's green this week since 25th October till 2nd October, till 2nd November, you meant. All right, so let's see, we got about 27 minutes. Nvidia is pushing up, AMD is pushing up. Tesla is down slightly because of the price cuts, $208, and then we also got Apple here. Pushing through, well, barely. Yeah, November, okay. That makes sense. Let's see SMH options chain. That's something I'm interested in today. Is SOXX at a lower price? No, it's even more higher. All right, let's see here. So November 25th, let's see, 180s, 665. That's not bad. It's not bad. Let's just do the math here. 180 minus 665. We're looking at 173.35. Yeah, that's a 3.8% return. That's really good. And 180 delta is 0.36. Oh, that's a little bit high. So let's just do 176. Let's see 176 here. 530. By the way, when I type, I'm pretty sure that's going to be pretty loud. 177. 3.1%. That's also really good. That's also really good. And delta's 0.3. And at 170, the cost basis comes down to, actually 175. The cost basis comes down to 170. And that confluence really is in the 150s. That's not bad for me personally. So that's something I will be looking at later today. And let's take a look at leaps too, because I'm also interested in some leaps here. All right, so new calls. There we go. That's how I was like, what? Why is the delta so low? Like, okay, calls 95 deep in the money. Divided by 186. 53%. That's not bad either. $95 deep in the money call options. That's 53% of the cost. That's something I might look into too for both of them. So I will be considering some cash skip puts and or leaps on SMH. But the only problem with leaps is really that the timeline, right? 2025. I saw this meme on Wall Street Bets earlier today where that's so funny, where this guy is at the hospital. This is a meme, right? So this guy's at the hospital and he wakes up from a coma after 2 years. And the first thing he asks to the doctor, what year is it? And the doctor goes, 2024. And the guy goes, has the Fed pivoted yet? and the doctor goes, no, but we're close. That was so freaking funny, man. They make the best memes. But that was so funny. That it's 2024. Has the Fed pivoted yet? Like, that's what the guy asks after waking up from a coma, and then doctor says, nope, but they're close. So Rishi Sunak, the new PM. Yep. So we did learn that he was running for prime minister. So closes in on Downing Street after Boris Johnson pulls out on leadership race. So I think that would be very, very interesting as well. I think he should have been the prime minister before Liz Truss. That was just so strange how that all played out. But Sunak could be confirmed as the next leader of the Conservative Party and UK Prime Minister as early as 2 p.m. Monday, by which point candidates need to have secured at least 100 nominations from fellow Tory lawmakers and to stand as leader of the party. So I think he's really the candidate there. So I think it's gonna be a done deal here very, very soon. What time is it in the UK? 2 p.m. So okay, we should be pretty much done here at any minute. Usher says that he goes back into his coma. Oh god, that's so funny. That pretty much brings us full circle. Yeah, so let's see how the FTSE is doing right now, if it's moving. So up 0.26%, not a whole lot, and then the gilts are also going to be part of this chart here. So we'll just take a look at the UK gilts too. So the gilts are moving down, which is good. This is really good. They've come down like under 3.9%. The 30-year, I mean, there's been so much movement in the gilts here in the last 3 weeks or so. So if you take a look at the 30-year, it's just been, man, a wild west here. Rallied after the announcement of the tax cuts, 48%. Literally went from like 3.5% to over 5%, 5.2 actually. And then the Bank of England intervenes, drops 30%. And then as they're moving out, they said Bank of England is kind of moving out after October 14, another 40% rally here. But then the pension funds are out and the prime minister goes away, 26% drop. It's just, so much back and forth here. Yes, Credit Suisse is going to report earnings on the 27th. I think that's when they're scheduled to report. Let's see, Credit Suisse is on Thursday. Thursday is going to be the 27th, yeah. So that is going to be very important for the markets, of course. I'm very, very close to Credit Suisse right now because I'm in Switzerland. So it'd be interesting to see what they end up reporting. And of course, whether there's any contagion effects. There is going to be some restructuring plans. So I think the market's going to really be paying attention to what are their plans moving forward and, how are they planning to raise liquidity, raise capital to kind of restructure and sell off some bad assets and really figure out, what the heck is going on with their bank. So I think the stock's now at $5 or something. Like, it's just insanely cheap at the moment. So CS under $5, so $4.72. So earnings are really going to be very, very important for this company. Let's see, Twitter up 1.3%. TSMC we talked about. Yep, definitely coming down quite a bit, 4%. Down $61. Really, I mean, I think TSMC is one of those companies that is undervalued, but again, it's got that, regulatory pressure, geopolitical tension, and all the things that, man, these companies can't unfortunately just trade normally. It's just always have to be like such macro risks. Look at that quarterly revenue growth. Like that's incredible. Like that's so consistent, and that's exactly what I like to see when I'm looking at a company, right? Just look at this trend. This is phenomenal. From like 12 billion to over 20 billion in the last 8 quarters. Like quarterly revenue. Every single quarter they've actually grown, quarter over quarter. And not just that, look at the profitability. Man, that chart's beautiful. So, so demand walking, I'm not unfortunately going to be in Sweden, but we'll definitely make a trip out there probably next year. But yeah, we'll definitely be in Stockholm. But I appreciate that. I appreciate. So Paris, yes, I'm actually planning either Milan or Paris. I don't know. Like I can only make one of those two work. It can't be both, because just I don't have enough time. So I was told that Paris is not that great. Italy is much better, but I don't know. I haven't decided yet. It's still pretty open ended. Quick question: everywhere you travel, your back walls are always gray. I can paint them red if that's what you're saying, Matt. I can actually paint them red later, just so they're more fitting with the markets. Oh man, I didn't mean to start a whole debate here between Paris and Italy. I'm just looking for a suggestion, guys. I didn't mean to start a whole thing, which is better. I'm sure they're both better in their own ways, but just looking for some suggestions, really. But anyway, so we got 15 minutes. For the markets to open. Markets are obviously very much higher. We got the S&P, Nasdaq, and the Dow all pushing up. The yields rotating back up, back over 4.2%. Volatility is up to 30. Oil prices are coming down. That's a good thing. That's what we want to see. We want it below 79 something. We want the oil prices below 79.28 by October ends. So. Anyway, so let's see, thoughts on NEO. We've already talked about that, but obviously it's been selling off because of what happened from a regulatory standpoint in China. So all Chinese stocks are down. Alibaba, Baidu, Tencent, NEO, all of them are selling off, unfortunately, and this just leads to more macro risks related to these companies. Yeah, TSMC's returns 50% last 5 years. So if you take a look at how much it's gone up, yep. So it's pretty much down to the same level as it was back in 2017. So let's see, 2017 it was actually. So in 2020, yeah, I think it's the same level as 2019. I would say, yeah, 2019. But yeah, 50% return since 2017 is obviously not super great. Yeah, most tech stocks in China are at an all-time low right now. Let's see how Snapchat is doing after that annihilation on Friday. So another gap, another day, another gap. That's what Snapchat's chart's been all about. It's just another day for Snapchat. Another day, another gap left behind. I think it's been very similar to Meta too, like Meta, PayPal, Netflix. Just another day, another gap. Huge gaps here, huge gaps here, another huge gap over here. Now the market cap sitting at 12.5 billion. Revenue 4 billion, so it's 3 times sales. So 3 times sales, again, not bad. A lot of companies now, you'll notice, they're trading at very reasonable levels from a price sales perspective, even from a price earnings perspective. But it doesn't really matter. It doesn't really matter because sentiment's so weak, macros are big headwinds, and this is just really an environment where equities come under a lot of pressure. All right, we got exactly 420 people watching. 425 now. So, but on my phone it shows 420. Yeah, make sure that you guys drop a like. I really appreciate it, and of course subscribe to the channel if you're not already. I would appreciate that very much as well. And yeah, we're ready to go. We're ready to start looking at some options and really looking at SMH today. So we'll be focusing on that. Of course, for the people that are super risk prone or not risk averse, so to speak, SOXL is definitely the one to watch. Jesse, yes, the Discord and YouTube are completely different. YouTube, it's just a thing to support here, but Discord is where really all the content is shared. There's a lot of private content, ad-free content, and videos that I share with all the members. And of course, downloadable spreadsheets like the one I showed you, the balance sheet one that you're asking about. Yes, that's also available to download that you can access over there. Viewable spreadsheets as well on Google Sheets with our intrinsic values. And then just a lot of other things like the Discord channels, the alerts, the options alerts, trade ideas. And we'll be starting a new options portfolio in January. So that's something that I've mentioned before as well. Brand new portfolio. The goal will be to simply do the wheel strategy. That's selling cash ticket puts and selling covered calls. And the simple, keeping it very simple, not trying to hit home runs. We're going to be looking for base hits, 1 trade per month, and we're only looking for 2% per month. That's it. Because options have been really good for 2022, like for us, for me personally, and for our community as well. So options really something that we want to take to the next level, and I will be sharing my portfolio there, and we'll be going over the weekly updates, what trades I'm taking, and kind of give you guys an updates on a more consistent basis. So that's what we'll be doing. All right, Sunak is the next prime minister as Return drops out as the leadership race. Perfect, Matt. Thanks for the update. Love the baseball analogy. Yeah, I'm not a huge baseball fan, but yeah, I do like that analogy as well. Tesla, what do you think? So we've talked about Tesla for a long time. Like we've pretty much spent a lot of time on going over Tesla and earnings and everything else. So we've, that's, you can kind of go back and check out the analysis and kind of jump back in. Robin says, people are bullish. Most companies would be broke if they had to borrow against actual rates. Be careful out there. Thank you for the donation, Robin. I really appreciate it. Hopefully I'm pronouncing your name the correct way, but you're absolutely right. I think if companies had to borrow at today's rates, the interest expense alone would be much bigger than, the cash flows or the earnings that they're making. And we will see, like, as the recession starts officially, even though some people are saying that we're not in one, we might already be in one, in my opinion. But when it starts officially, and when obviously we start to see the dominoes fall, we'll see which companies actually have the ability to survive. Depends very much on the severity of this recession, how brutal it actually gets. But you will see bankruptcies. You will see companies go under. That's just, that's what a recession looks like. And yeah, it all comes down to which companies have good cash flows, good earnings, pricing power, companies that can kind of weather the storm. They have liquidity to survive. And the ones with a lot of cash, the ones with good free cash flows are the ones that not only survive, but also take advantage of those opportunities, because as these companies go out of business, there's a big void to be filled, right? There's big opportunities in those markets, and that's how they can kind of tap into those as well. Let's see, TTCF is under $4 now. Let's see. So we haven't talked about UPS yet, Jason. I'm going to take a look at that here in just a minute. But yeah, Tattoo Chef here, a little bit, about 3% down, $4 right now. I haven't, oh man, I forgot to try TTCF. I was going to try it. I forgot. Yeah, probably will have to do that next year now in 23 when I go back. So, well, hopefully I didn't miss anything special. So, yeah, Kevin says lots of M&As coming out, mergers and acquisitions and buyouts. I totally agree. I think with the valuations where they are, there's definitely going to be a lot of potential opportunities. I mean, Peloton, I could see Peloton being a really good fit with Apple, because Apple is really into fitness and, kind of catering their devices to fitness and all that stuff. Peloton, I think, would be a good fit for Apple, and Apple's with the cash they have and Peloton's value of 2.5 billion, it's literally like just writing one single check from Tim Cook and then that's it. So I think that's a good fit. And then there's also a lot of companies. I do also think that if Snapchat really just literally just gives in, you know, like 12.5 billion, obviously it's been such a brutal stock and they haven't really figured out profitability in such a long time. Like they've never been profitable. So I think getting acquired for Snapchat might also be just end up being a good, better value proposition and how well it ends up doing. True says, why was Tattoo Chef was such a popular stock? Baffling. I've never bothered to look into it. We've analyzed it a couple times, but just I never understood the hype either. Maybe because I've never tried the food. Maybe. And like I said, that's why I'm like thinking maybe I missed like some good tasting food maybe. I don't know. Yeah, Srinal says either Google or Meta should buy Snap. I think that would be a good sort of integration. It would be a much better integration for Meta with Snap than it is for Google with Snap. I think Snapchat would fit right in, like literally right in with Messenger, Instagram, and all these other applications that they have. So that's a potential acquisition there. And then there's a lot of targets for some of the bigger ones to buy into, right? Shopify, I mean, if it keeps selling off, like who do you think they'll buy Shopify if it sells off? Like, you know, bring it below $10 billion, $15 billion, which company will be all over it? Amazon, right? Yeah, Amazon would be all over it. So Shopify, Amazon would be a great integration. Apple, Peloton, Meta, Snap. I think these are some great potential marriages that we can think of. Yeah. Square is not low enough. I feel like Square, actually 33 billion. I also think Apple and Square might actually work out too. Like Square and Apple has pretty big dominance in their Apple Pay as well. And they're actually trying to boost that services margin and trying to move their services sector. So I think Apple and Square might be a good one. Square can also easily integrate with, I want to say Google. Google might also be a potential merger partner for Square. Yeah, SoFi is a good target as well. SoFi definitely. But I just think I don't think SoFi wants to be acquired. I don't think SoFi is going to be in the business of like just getting acquired. I think they've got a much bigger sort of mission. Anthony Noto, I think the way he talks about the company, I think he's got a much bigger vision to keep going. And I don't think he's just going to give up because the market's been down. But anyway, 5 minutes left. We are ready to take a look at the markets here. First day of the week, earnings are coming up. Some big earnings scheduled. So nothing today, but starting tomorrow, we've got lots of them. And I will be live. So let's see, 3:30 is when the market opens here. So we're looking at 11:30 for when the markets close. Okay, it's not bad. Around midnight. Yeah, I mean, I could still do market close live streams today, and go over the earnings. So Vlad is asking market green or red. So we did a poll earlier. We had a 450 votes, and I think majority of people, I think 60% were expecting the markets to be green today, and I think 25% was red, and whatever the remainder is was flat. Kevin says Oscar's gonna be pissed. Beneath, Caddy, why is 6039 the support for TSMC? Let's take a look. So, all right, let's see. Actually, it might be a little bit lower. Do I have the moving averages there? There we go. So right now I would say 6390, you said, or 6039. Okay, so 6039. It might be actually a little bit lower. It'd be $58, 50 at 15. Right now we were kind of trading at that 300 SMA, but now we're starting to kind of break down even further. So next support really is going to be 50 at 15, kind of in line with that previous resistance. So that's a level to watch. All right, the 10-year yields are rotating back up, guys. What is going on here? We're back over 4.238%. Take a look at the 5-minute chart here. We've just been kind of climbing higher, slowly and steadily. What's happening? What is going on? 2.2% move. So I'm going to set some alerts here beyond 4.4%, 4.5%, and then all the way up to 5%. At 5%, something's got to break. Like, absolutely, something's got to. There's no way. Because yields at 5% will be... At 5% will be at their highest levels since 2007, right? 2007, 2008. Just before the Great Recession and the housing market bubble, like the crash. At 6%, we will be at the highest level since 2000s. At 7%, we'll be at the highest level since 1996. 7.5% would be 1995. And 10% would be 1980s for the 10-year yields. And TLT has never been this oversold. It's just insane how much it's been selling off. Look at this. Is that meta? Is that what I'm looking at? 48%. Oh, brutal. The 60-40 portfolio has been destroyed this year. You know, we did a video on the bond market. We talked about how the performance of the bond market was used to be seen as negatively correlated to the equity performance. And this year, it's been more or less positive. And I think it was mostly the last 20 years. I was actually trying to find that video. PayPal too, yeah. I was actually trying to find that video where we talked about the bond market. And it was an interesting research paper from one of the banks, and very, very long read. But really what that shows was the last 20 years is when that negative correlation really played out, where bonds offered some type of stability to portfolios, where equities were going down, bonds were kind of pushing higher. They were moving in that inverse correlation. But before that, for a very long time, they both moved in the same direction. When stocks went up, so did bonds. When stocks went down, so did bonds. So we're kind of rotating back to those times where both equities and bonds are struggling. So the yields are the main driver here. Yes, happy Diwali, everybody, to all the people who are celebrating out there. I hope you all have great health and are filled with a lot of light on this great Diwali festival. So anyway, so here we go. So the market's going to open here in about a second. The S&P is already pushing higher, 0.5%. So we're going to open up 0.42. The Dow opens up 0.5%, and the Nasdaq's also up 0.4% right now. The yield's 4.22%, so pushing through. And then of course we got a lot of individual stocks also somewhat mixed. Apple's higher, Tesla's struggling right now, 4% down. I don't think we've breached $200 yet. How many people in the chat? And I want to see 557 people all answer, will Tesla break below $200? Yes or no? Will Tesla break below 200, or if it's going to stay above 200? Kevin says yes. Matt says yes. Siren says no. Ooh, lots of mixed responses. Let's just do a poll. If there's that many mixed responses, we should do a poll. Will Tesla break below 200? All right. Let's see it. We're coming close, 4.5%. Make sure you vote before that happens, though. Should be interesting. AMD obviously selling off here, just a little bit of $58. It's such an interesting situation because I've got a cash ticket put on AMD at $60 strike, but with the strike, with the premium collected, my cost basis is $57. My buyer is not exercising me. It makes sense because he doesn't want to. My break even's at $57.50, so he's not even making money right now. But it's just been like fluctuating right around that level. Just need one more month of these levels, and we're good for that option. I think he might just end up, or he or she might just end up exercising, I think, at that point. But here we go, $204 right now. We're almost kind of breaking below that level. And there comes 203, 203.69. Down 5%, Tesla is. So Calderon, why is Tesla tanking so hard today? So they cut their prices on, yeah, so I can roll over my option at a lower price. I know that. I was thinking about that the other day. I want to take a look at some of the options chain as well. But Tesla did cut their price for their Model Y and Model S in China. So one of the reasons why the stock is selling off here. Nvidia is also getting a bit of a dump here, 1.2%. Pretty much all FANG, Mint, big tech names, all of them selling off here quite a bit. And starting with Chinese names, down 12, 14, 16%. Alibaba's down 12.5%. Wow, Tattooed Chef is down over 8% right now, under $4. Yeah, so we don't have a lot of green. Vertex is the only one that's up 2.5%. And we got TrueLeaf, surprisingly higher. ASML's higher. You got CVS. And then some of the other companies like, Adobe and Charles River, SLM up 0.5%, 1%. But all right, let's see. We got 78% yes. That's interesting. Quite a lot of people expecting Tesla to drop below $200. We'll create an alert at 220. We'll create an alert. But let's see. The market's rotating back down. Nasdaq's down 0.44%. The Dow is doing much, much better, right? So Dow companies, which are more value oriented, doing much better. So the only stock that's down the most is Apple and Dow Chemicals, and Salesforce a little bit. Yeah, and then a lot of them, so Coca-Cola, Verizon, Amgen, Merck, UNH, Travelers, Johnson & Johnson, all of them up 1.5%. So there's a big outperformance from the Dow Jones relative to the Nasdaq and technology sector, technology names. Again, the yield's pushing higher. Cost of borrowing is going to be much higher. A lot of the growth companies are levered, not as much as some of the more value-oriented companies. So that's why their interest expense goes higher. That's why multiples do compress faster for growth companies as opposed to value companies, because their values are already trading at such low multiples. For example, if you take a look at Coca-Cola, although there's a case to be made that Coca-Cola's price earnings multiple is still way too high compared to some of the other companies, right? If you take a look at their price earnings multiple, 25, right? 25 times earnings for Coca-Cola, but 20 times earnings for Google. Google might actually be even lower. So Google is actually at 18, right? Under 19. So that's why I actually did a video on this in the past. Like, this is absolutely comical that a company like Google, which is expected to grow earnings in the future and grow at 20, 30%, trading at 19 times earnings, whereas Coca-Cola is expected to grow earnings in the low mid single digits, trading at 25 times earnings. Doesn't make sense at all. None whatsoever. That's the market. But yeah, the Dow Jones doing much better right now. It's already up 321 points, up 1%. Ooh, Tesla has some buyers stepping in. Low for today, $202.60. We're like $2.60 away from So Elon could be selling any day this week. Yep. So we're going to have to wait for Form 4s to be filed with Tesla to have any type of understanding and, just the confirmation that Elon Musk is actually selling. But right now, obviously, it's pure speculation. I don't even know if he will need to sell it, because I got to catch up on the Twitter deal as well and what's going on with that. But I know that he does still need $7.5, close to $8 billion to close the deal to kind of meet his obligations, meet his commitments there. Richard, you asked us that it would break $200. You didn't ask when. That's true. That's true. I didn't ask when. But just in general, I mean, just in general, will Tesla break below 200 or not? May not be today, but in general. Because that's the level that we have kind of gotten down to. Like, if you take a look at the daily chart, you know, Tesla has not traded below 200 since July. Below that, you know, June really was the time when it was trading at low 190s, high 190s, low 190s. So it's been a while since Tesla's traded below $200. And so Alibaba, yes, I have gone over that earlier. So you can go back and kind of check out that part of the live stream where we talk about Alibaba, Neo, Tencent, Baidu, all these companies, and then you can fast forward to this. Tesla going to 150. Simon says, how low does Tesla go if he sells for $7 billion for Twitter? Not really that much. That's literally pretty insignificant. That's not going to be a huge deal for Tesla. So not that much of an issue. All right, so we're seeing some buyers to step in. Apple's up 0.35%. AMD also rotating back down. We got Nvidia now in the green. Microsoft and Google are up. We still have Tesla down 4%. Meta's down 3%. Netflix is down 1.4%, but a lot of them are rotating back higher. So we do have some buyers stepping in ahead of the key earnings reports later this week. All right, let's see. If you have any questions, let me know. Can't wait till Microsoft drops. Microsoft, fantastic company. Would love to get it in at around 200s, low 200s. That's going to be the fair value. I still think that it's trading a bit of a premium valuation here, but you know, it's one of those few companies that can demand it. You know, at 13, 14 times sales. Right now, 9 times sales. It was much higher though, right? It was 12, 13 back in the second quarter of 22, third quarter of 22. Right now it's come down. CTRS, how often do you look at insider trading? Not very often. Yeah, no, not that often. One thing when it comes to insider trading or any type of buying and selling data that you get, the selling data is not as important as buying data. Right? In other words, when you find out that, oh, an insider is selling stock, that is not necessarily bearish, right? Just because somebody's selling shares doesn't mean it's bearish at all. You know, they could be selling for a million different reasons, right? There could be a literally infinite amount of reasons why they might be selling a stock. But that's not the same as when you're buying the stock, right? When an insider or somebody buys a stock, they're only buying it for one reason, to make money. Right? So there's a difference there. I might pay more attention to the buying side of things. Like if somebody's bought something, I'll take notice. But when they're selling, you know, they could be selling for, you know, a lot of different reasons. So just like Elon Musk, right? Selling Tesla shares. Does he want to because, you know, he might be bearish on the stock? No. Does he think the company's not going to do well? No. He's selling Tesla because he needs the capital. People might sell to pay taxes. People might sell, you know, to fund their other projects. People might sell for, again, a lot of different reasons. Yeah, I know market opened already. You guys are making fun. I know. Market's open. All right, Tesla's going down there for another attempt, possibly to break 202. We'll see. We're still kind of at the low of the day here. So we're trading pretty much at the 52-week lows right now. Caddy, do you invest in oil stocks? Not why. So we have invested in XLE before. We have traded XLE before, but not necessarily trading it right now because, like I said, the year has been really good for oil. But is this sustainable? Is this something that will continue for several years out? That is still unknown. The answer is no, and you're already seeing earnings expectations for Exxon, Chevron, Occidental. They're all, expected to see big declines in earnings for the next 4 years. Wall Street plays a really funny game. They just look for what's going to be popping in the next 6 to 12 months, right? What's the next big idea for the next 6 months, 12 months, and how I can beat the S&P 500. That's what they care about, because that's what they market. That's what they say. Like, look, we beat the market in the last 12 months. Come invest with us. You know what I mean? So they don't really look at what's going to be the 5-year time frame or 7-year time frame. And that's why I often mention that institutionals, mostly hedge funds, are positioned for the short term, and retail is positioned for the long term. And that's why retail obviously struggles when hedge funds do these mass sell-offs, and the stock, obviously they control the market with the amount of liquidity they have. That's how it ends up being, unfortunately. Dude says, let's stay live on the chat until Tesla breaks 200. Let's just go over to the 1 minute chart if you want to get really, really granular. So right now we're getting rejected at the, I think it's 9 EMA, 21 EMA. So, for Tesla, we got up to that 21 EMA, got rejected at 205, and right now just coming down to that intraday. Oh, right, as I was going to put that support here, we broke down to 202.43. Yeah, the 10-year yield is still pushing higher here, up almost 1% now, 4.2.5% at the moment. There we go, some buyers stepping in here for Tesla. A little bit of a bullish divergence going on for Tesla as well on the 1 minute chart. So there's the big higher low and the lower low for the price itself. Let's see if we can put up the VWAP here. Yeah, so right now we're just at the lower band, between the lower and the middle band for the VWAP. So we'll see if it actually breaks above the 21 EMA, that's going to be 205, or if it continues to break down and make new lows. M&A, what strike did you sell to put on Tesla? 190. 190. I'm like very close. The one that I sold earlier, I'm already assigned on, so I'm going to be selling covered calls on that moving forward. But the other one at 190, I'm still waiting, but I'm very close. If it breaks below 200, it's going to be nice. It's going to be nice to know that we allowed for the stock price to come to us. We were patient. All right, let's see. What if every insider is selling and no one is buying, and that's Tesla for years now? Yeah, I mean, you would mostly see like some of the new executives and new directors kind of buy, because a lot of the stock options were already assigned when Tesla got originally started, so you won't necessarily see a lot of buying happening after 10 years. So they're mostly taking some profits off the table, which I think is fair. So there we go, big breakout above that 21 EMA. That bullish divergence kind of playing through, and we're almost making a new high of day here at 206. There we go, almost there. Big breakout for Tesla. The volume is decent too on this candle. We've got about 500,000 shares traded. Oof. What a wick. So Caldron, brokerage, there's plenty of brokerages that anybody can use. TD Ameritrade, Fidelity, Webull, the list goes on and on. E-Trade, Interactive Brokers. I mean, there's just so many that you can choose from. So we did make a high of day, but then a little bit of rejection there. I think it might come down, kind of test that middle VWAP as support, and then there might be opportunity for some more upside here for Tesla. There we go. Look at the Dow, 1.4%. That's a very strong green candle coming in. So yeah, Tesla's still down 4%, Meta still down 3%, AMD down 1%, Nvidia down 1%, Microsoft and Google are doing really, really well. Oh, look at Neo. Absolutely getting destroyed. Baidu, JD.com, Alibaba, $61. Jeez. 15% down. Is Tesla right now just validating that 21 EMA after the breakout? We'll see if that level holds. We actually see a new high of day here for Tesla. So Matt, that's because Skyman, that's because Tesla's the only one that hasn't made a new 52-week low. That and Apple. Everything else made a new 52-week low. Tesla's so close. It needs to drop like $3 and it would be at a new 52-week low. So it's not necessarily we're just focusing on Tesla, it's because it's very close to making a new 1-year low. But yeah, Chinese stocks are just, man, it's a bloodbath for China right now. Nothing is not down double digits. For all the stocks that are open and trading, nothing is not down double digits here. Brutal. Yeah, AMD is still coming down to new low of day here. Adobe's come down quite a bit to very, very attractive levels, I think. John, Tesla's made a 52-week low. Yeah, I mean, it has from back in June, but not recently, as a lot of companies have come down to new 52-week lows. Tesla still needs to come down below 202. But yeah, Adobe, I think it's one of the names that's trading at somewhat reasonable values. I think I did a video on Adobe and Visa not too long ago, going over the intrinsic value in that video. So I think that's worth watching if you haven't already. All right, Tesla rotating back down, getting for that third retest here, third time's a charm. Sanjum, what do you think swing trade idea on Chinese stocks like Neo, JD is a good trend? Honestly, you're kind of working against the trend. Swing trades, reversal trades are incredibly challenging. They're very difficult to do because reversals, you're kind of working against the trend, right? If you're going through a pullback strategy or a crossover strategy, you're kind of working with the trend, right? And always kind of, there's higher probability for success if you're trading with the trend than against it. With the amount of weakness that you're seeing in companies like JD and Alibaba and Neo, sure, you can get a dead cat bounce, but that would be very lucky and that would not be skill. So the probability of success is really low. That's why your stops need to be very, very tight when it comes to trading reversals. With pullbacks, there's more flexibility there, so you have a little bit more wiggle room when it comes to placing your stop losses. But I would say, like, if you are looking to trade JD.com or Neo or anything like that, considering how oversold it might be today after the sell-off, just keep very tight stops because sentiment's weak, technicals are definitely very weak, and the trend is also not in your favor for the long side. Yeah, new Prime Minister declared in the UK, Rishi Sunak, we talked about that earlier. Thanks for the update there, Shunk. Ms. Will says, my buy target for Tesla was 180 initially, but now has changed to 130. So again, curious to learn about why that change happened. Is it mostly because the stock price is coming down, or is it more fundamental based in terms of earnings and what your projections were for revenue and your entire thesis changed, right? There's nothing wrong in changing your mind, right? That's the market, right? Everybody literally people are changing their mind right now as they're buying and selling stock. So, but it's just having that reason, having that thesis behind it to support your decision is always, I think, important. 130 sounds good. Matt says, 130 sounds good. That's okay. That's a good reason. That's not a great reason, but I'll take it. All right, so okay, so we've been live for quite some time here, everyone. So thank you so much for joining in. I really appreciate it. It's been a lot of fun trying to figure out the time zones and kind of making that mistake initially of going live too early. But we've got lots coming up. I will definitely be on top of it. I promise. I'll be covering earnings reports, earnings calls, summaries. I'm just ready to take a shower, get some food, rest a little bit, and then I'll be back at it with all the earnings. So thank you so much for joining. I really, really appreciate it. Make sure that you drop a like and of course subscribe to the channel if you're not already. Wait, we'll see. We'll see if Tesla comes down this time around. Well, I'm just gonna wait a couple more minutes here, see if Tesla actually breaks below 200, which is what we're waiting for right now. So we'll see. Just waiting for a couple more candles here. 5.2% is not a small day for Tesla, actually. It's a pretty big day because, if you think about it, 700 billion, 10% is 70 billion, 5% is 35 billion. That's like 35 to 40 billion dollars in market cap for Tesla today. Yeah, it does seem it's a little bit weaker, like just, in general, lower highs and lower lows. So it should be interesting where it ends up trading. What will be the market cap? Tesla goes to 130. Oh, 130. So what are we looking at here? 70. We're looking at a 34% drop. Actually, no, you said 130. Okay, so 130 we're looking at, we're looking at a 34% drop, 35% drop. Yeah, that would be, well, just take 700 and multiply it by 0.67. 469 billion. Under 500 billion would be the market cap. But anyway, thank you so much for joining, everybody. I really appreciate it. And also subscribe, and the links are going to be down below for our Discord. If you want access to all the buy and sell alerts, the new options portfolio that we will be launching very soon, and of course our trading ideas, our private content, ad-free content, all that stuff, and the fundamental technical analysis course links. The bundle, the 40% coupon, does expire October 31st. There is going to be a Halloween discount as well, so if you're interested, that's available for another 7 to 8 days, and that's the first thing down below as well. So thank you so much. Hope you all have a great day. And man, every time I try to leave, Tesla starts coming down. Make a decision already, everybody. Just break us below 200 or rally us to 210. I don't care. But anyway, thank you so much for joining. As always, happy investing, and I'll see you guys in the next live stream. Take care.